Right, we're moving to the other side of the value chain rather than the blockchain. And someone who operates very much in fiat currency, I think, I assume. So what happens when you've got a great idea? What happens when you've got a startup? What happens when you've got a minimum viable product? Generally, the next thing you need is funding and finance. Very often I hear anecdotally, people talking about constraints on entrepreneurs, constraints on startups, and a lack of finance. In our experience as the Cape Innovation and Technology Initiative, once you have a minimum viable product, there isn't a shortage of finance. And I'm hoping that Llew Claasen is able to elaborate a little bit more on that for us. So Lew's going to talk a little bit about what he does, what they do, what they provide money for, but much more importantly, how they see the landscape evolving and how it looks at the moment from an investment perspective. Please welcome Llew Claasen.
Thank you. Thanks for joining me for my talk today. Well, as Ian said, I want to talk a little bit about where we see things going at the moment and what are the most promising opportunities. Just quick background is, so what is Newtown Partners is, Vinnie Lingham and I created an angel investment firm about 18 months ago, and essentially this is the vehicle that houses the South African investments. So there's been a lot of talk over the last while about permission-based distributed ledgers, Bitcoin, Ethereum, Hyperledger project, which is the right one that you should be building on. And certainly, from an investor's perspective, that is something that's super important to us. But in order to understand what the answer to those questions is we first need to understand how does what we're going through at the moment with distributed ledgers and Bitcoin mirror the internet. And what we quickly find is that in actual fact, we are very, very early on in this process. And in fact, what we're working on at the moment is arguably more like the plumbing than it is on like the interior design. And so we don't even know yet what the most disruptive use cases are going to be. And if anybody tells you that they do, they're bullshitting you. So what is it about the internet that we can learn from, in terms of its even philosophy, its technology, is that it is also a distributed and decentralized network, which was created with that specific architecture because of security. It doesn't have a single point of failure. It's permissionless, so anybody can join it. And it's not governed by anybody. So what governs it is the open protocols. And so Bitcoin came out of exactly that kind of philosophy, and there's no reason to believe that that will change. And so when we're talking about the internet, it was about how do we move information in a frictionless way across the world. When we're talking about distributed ledgers and Bitcoin in particular, we're talking about how do we move value. But everything else about that network remains exactly the same. It's based on the idea that we should have the right to participate and that we should have freedom of expression and privacy and all these other things. And based upon what we know now about the open internet, I think that despite the fact that the many problems that Bitcoin are going through at the moment, I wouldn't bet against an open Bitcoin protocol prevailing. So, and I think that the other thing that's oftentimes problematic with some of the pictures that we see is that the protocol is not the product. So you first need to have a problem that is worth resolving, and Bitcoin or any other distributed ledger needs to be the most important or best solution to the problem. It cannot be the product. And so what we're seeing, based upon what people are saying, or the really smart people are saying, is that we think that the most important and most disruptive use cases for distributed ledgers are going to revolve around or be in the space of P2P applications, whether from a payment perspective or from a contracts perspective. And so which industries do we think are probably going to be most affected by this kind of disruption? Well, we think they're going to be in trust and assurance. But over and above specific industries, we think that anything that has a P2P component to it has a high likelihood of being disrupted. And so when we talk about these trust and assurance industries, it could be government, law, accounting, auditing, they're all going to be affected. But before any of that happens, there actually needs to happen something before, which is business models need to be disrupted. And so what needs to happen in advance of some of these use cases is that we must have, for example, an Airbnb 2.0, which is completely distributed and not governed by a central authority. We must have an Uber, which is similarly so. And so the question then is, despite the fact that there are all these uncertainties about what will prevail, if you're still one of those startup entrepreneurs that is wanting desperately to be involved in this space, then the first thing I can tell you is that it's going to be a really, really uncomfortable ride. But when we look at these investments, what's interesting about it is that we look at them very much the same way as we would view any other opportunity. Not much actually changes. And so we make use of a tool that happens to be called the Critical Factor Framework from the Canadian Innovation Centre. And it looks at any business opportunity across 8 dimensions. So the first is adoption, product status, protectability, customer engagement, route to market, market potential, relevant experience of the entrepreneurs, and what does the financial model look like? Are you going to make money? But that said, there are really only 3 things that are super important to us when we're looking at new opportunities, whether they are Bitcoin or blockchain based or not. And that is, do we think that there is a high likelihood that customers are actually going to adopt this technology or product? Do we have any indication that somebody has already adopted it, that there are already users, and that we can sort of take whatever information we've managed to learn from that and extrapolate it into something that looks like, say, a 1 or 2 year plan? And then finally, is the market big enough? So it's not useful to solve a problem that only affects 2 people. We need to know that, we happen to use as an indicator of like what is a big opportunity or not, is that when you break it down to exactly who you're serving, if that opportunity across the whole market is not worth 200 million rand, which sounds sometimes like a big number, then don't even do it. We have other criteria as well that we apply to these opportunities, and these would tend to be used in a more negative fashion. So we wouldn't use them to select, we would use them to actually filter. So these are like, is the product ready? If the product is not ready, we will not invest. Do we think that there's any chance that you can protect your position in this market? If the answer is no, no investment. Do we believe or not believe in your route to market? So here, there's a fine line, actually, because sometimes we get too involved in a pitch because we like somebody and we want to show them or we want to influence the plan, and more often than not, that doesn't work. So it really needs to be, we need sophisticated entrepreneurs that understand what the opportunity is and have a believable route to market, combined with, and this is maybe the one criteria that we are slightly looser on, given where Bitcoin and distributed ledgers are at the moment, is that we need to make money. Right now, on the blockchain and distributed ledger stuff, you actually don't need to make money. You just need to get somebody or enough people using your solution to be able to say, this is interesting. We could go somewhere with this thing if we had to put some cash in there. Of course, if there's no chance that you will ever make money out of it, then that wouldn't work either. And then, of course, the final issue, which is as a negative criteria, is if you've got absolutely no experience in this space or skills that are relevant to this space, then it doesn't matter how good the opportunity sounds, because your ability to execute on it is probably not going to be there. So I want to talk a little bit about some of the startups, international and African, that we like, or that I like, and maybe what are we learning from where they are. But I just need to put a little caveat in that, which is, as I said in the beginning, we just don't know. So what it is at the moment is it's like, based upon what other people are doing, where are they managing to make progress? Where are we finding interesting use cases evolving based upon the number of people that are using these kinds of technologies? And so when I talk about, for example, digital asset holdings, I think that the first thing that comes up with any talk about distributed ledgers and blockchain today, or at the moment, is financial institutions and their willingness to adopt something in this space. And what's interesting about this something in this space is that we often, as Bitcoin enthusiasts, want to apply Bitcoin to that problem and go, it has all the following benefits and it's trustless. And the reality is we don't first ask, what is the problem that the financial institution is trying to resolve? And so when we start to unpack that, you quickly realize that, for example, these transactions are taking place in a banking environment between two trusted parties. And it's already in a known currency. And so there are question marks around, is there any point in using something which is really expensive, like proof of work, in order to validate transactions when you have no desire to have pseudo-anonymity? And so that's, I think, at the core of why are financial institutions even considering things outside of blockchain. But at the same token, when we're trying to put together solutions for financial services industries, we should not automatically dismiss other ledger types. So digital asset holdings is interesting because they've raised a lot of money. Ex-JP Morgan founder. They've got a lot of banks that have put cash into it. And what they're trying to essentially do is say, we know that there's something interesting in the distributed ledger space. We don't really want another currency. And we know that there is probably something to do with clearing, settlement, custody. Those are the important use cases that we have where we think distributed ledgers are going to be useful. And what digital assets is trying to do is to say, let us build solutions that would work for those kind of banking customers. Now, it is a closed network, and we don't know a lot about what they're trying to do yet, but we do know that JP Morgan has already started transferring money between London and Tokyo for a claimed 2,000 customers using a distributed ledger technology. So things are moving quite quickly in that space, and it's not making use of the blockchain for Bitcoin. The second is, and this speaks to a much bigger trend, Blockstream first published a paper on sidechains. And why sidechains is interesting for us is that it talks about this idea that you can move value from the Bitcoin blockchain onto an alternative blockchain that has different rules. Because, as we've already realized, some use cases have a slightly different technology requirement. And so what these sidechains, in theory, because there's still very little to be shown for this, but what they allow us to do is to move value onto the other sidechain, manage them by a completely different set of rules, and at some point in time, because they're connected to each other, move that value back onto the blockchain if you need to redeem using existing Bitcoin architecture. And so we think that that's a really, really interesting idea and talks to this idea that there is not going to be one ledger. Question mark around which one is going to be the most important, least important. But the point is that they're going to be more than one, and they're probably going to have to speak to each other at some point in time. Eris is interesting to us because Eris is trying to address what we think is the next step in the evolution of these distributed ledger technologies. And what it is trying to do is to create an application layer. One of the problems with working with it at the protocol level is that you have a high technology understanding requirement. And so what Eris is basically saying is, let us create a framework that allows people to create peer-to-peer tech applications without having to actually know too much about what's happening at the protocol level. And the reason why that's also important is that the platform specifically is ledger agnostic. So you don't have to make a choice today about, is it Bitcoin, is it Ethereum, is it Hyperledger? It's more about what can we build at the application level, making use of the idea of a distributed ledger and the inherent trust in that kind of architecture. A lot has been said about Ethereum. I'm not going to say a lot about it, but it's similar to the point before. 29th of February, they released Homestead. Homestead changes things quite dramatically because it enables, similarly, people that have less, that do not work at the protocol level to suddenly start building peer-to-peer smart contract applications. And if anybody, for those of you that are following the price of Ethereum or Ether, you'll quickly realize that things are moving really quickly there as well. And we think that they're a good indication of how an alternative blockchain can be a better solution depending on what that use case is. And that doesn't mean that Bitcoin is bad. It just means that sometimes the technology requirement is slightly different. Hyperledger project, similar kind of idea. The Linux Foundation comes into the fray. A lot of big partners kind of going, hey, hang on, we should be playing in this space as well. It's not as clear as one group of people should be dominating the conversation or the technology choices about what's going to core or classic or any other ledger for that matter. And so there's very little work that has happened here, but what is interesting is that some of the really big players that I spoke about previously, say Ripple and some of the other guys, have already contributed code into the Hyperledger project. And so it's moving really quickly. So it'll be interesting to see what comes out of that process. And again, we don't know, but there's a lot of movement, and they've got some really big names that have put their support behind this project and are saying, we think that there might be another way of doing this. I spoke about Ripple briefly. The issue that Ripple is essentially trying to resolve is this idea about, is it possible for banks to transfer money between each other without any kind of trusted intermediary or counterparty? And so they're essentially saying, we don't need that. That is, we can simplify it down to the point where they have their own blockchain, they have their own token, but they're addressing a very specific use case, and they believe that they're going to be able to come out on the other side with some really interesting partnerships with banks as well. So we want to watch what they're busy doing. Bitfury is interesting for us because there was talk early on about sort of most of the hash power in the Bitcoin network sitting on the other side of the Chinese firewall. That's a known issue. And I think that they've got a new data center that's coming online, I believe in Georgia, that they expect to double the hash capacity of the network. And so part of that, I guess, is like, does that massive addition to the network suddenly change the dynamics for good or bad? So we would definitely watch them. They've raised about $60 million for VCs, and they've made some other interesting investments as well. Coinbase is the largest Bitcoin exchange and mobile and wallet operator in the US. And what we think is interesting there is that they're essentially allowing you to top up your Bitcoin wallet via EFT or credit card and a couple of other methods. And they've actually raised $106 million already. And their claim is that they want to be able to, well, they're already capable of doing this, but you can make a selection about holding your balance in currency. And they expect that they'll be able to do this, and then their plan is certainly to be able to do this across 30 countries. And so the idea here is that suddenly you can sort of transact all over the world in your native currency. With itBit, what's interesting about, also a Bitcoin exchange, also US-based, but we think they're interesting because they've decided to take the approach. They were one of the first Bitcoin exchanges in the US to get a BIT license. In other words, they were approved to take and hold deposits by the New York Financial Services Board. And why that's important is that they've adopted the approach of saying, it doesn't have to be about we must break the system in order to be a success. Now, as to whether or not that's the right strategy, and we'll talk about some other players that are taking an opposite approach, we don't know what is the right answer, but they're certainly saying we would rather work with the regulators, we would rather jump through the hoops that they want us to jump through, and we would like to. They've already got in beta a program called BankChain, which is also very much focused on the sort of idea of clearing, settlement, and custody, and they believe that they're in a much stronger position to be able to offer that to financial services businesses based out in New York, if they are playing nicely with the regulator. Kraken has decided to take the opposite approach. And so they decided that they were not going to take a BIT license. In fact, after they acquired CoinSetter, they decided to actually cease operations in New York, even on the CoinSetter side. And so most of the volume that they're processing is through Europe, but after the acquisition, quite a lot in the US as well. And I think that the point here is that it's the opposite of the approach being taken by itBit. And they're saying, no, it's counter to the ethos of what Bitcoin is all about, and so we are not going to jump through those hoops. But what they're also finding, and arguably it might be putting pressure on their model, is that they're saying that they're expecting at the Bitcoin exchange level that there's going to be further consolidation in that market, again, to get to a certain level of scale, but perhaps also so that you become big enough to matter and can influence that dialogue around what legislation is the right kind of legislation, if any. Most of you are familiar with BitX. They'd raised $4 million from Naspers and specifically through the PayU subsidiary. And we think they're interesting because aside from having started in South Africa and now being based in Singapore, they provide a wallet solution and also a Bitcoin exchange with a very strong focus on expanding into Southeast Asia. And we think that we love to see examples of South African businesses doing that, because the reality is that the South African market, particularly on the consumer side, is really small. And so if you're going to build a startup, particularly something which is very technical, don't focus just on South Africa. It is too small. You won't get to scale. You will run out of money, and you still wouldn't have proven whether or not there is market demand for what you're trying to do. Circle, similarly, spoke previously about some of the other wallets, but Circle is trying to address this issue of saying, okay, in the internet, if I want to post an opinion or I want to send you a file, it's really easy for me to do. There's hardly any friction in the process. But if I want to attach value to that, it becomes super difficult. And so they're saying that they don't want to create a new currency. They just want to enable you to transact in your native fiat currency, with Bitcoin providing a layer which enables those sort of cross-border or other transactions. And we think they're interesting because they've also got super big ambitions. They've raised $50 million from the likes of Goldman Sachs, and they're doing really, really interesting stuff in this space. Also adding more and more currencies to that pool. Elizabeth was here as well, and she spoke yesterday. So I'm not going to go into too much detail about BitPesa, except to say that we love the fact that they're pushing the boundaries and making the regulators uncomfortable, because that tells us that there is something really interesting worth resolving over there. The fact that the Kenyan regulators are still trying to figure out whether or not it's a remittance service or whether or not it's a service based on cryptocurrency is indicative of the issues that are happening across the world. And I think that it's maybe just more pronounced in some of the developing markets where the need is just so strong. So we think that they're making all the right noises by upsetting the right kinds of people, and we want to keep watching what BitPesa does. We also like Zapgo, and the reason for that is that they're creating a platform that enables just about anybody to create a branded wallet that makes it easy for just about anybody in a closed community to be able to use Bitcoin to do micropayments. They're based out in Stellenbosch, part of the Barclays Accelerator program as well, and we think that they're doing super interesting things. And we think that it's once again, it's a problem that's worth solving. What's interesting about the approach that they've taken compared to some of the others is that they're quite open to the idea of sort of having kiosks all over the place where you hand over cash and some element of KYC in order to be able to top up your account. So that also enables other things which are super interesting, like, for example, online payments without credit cards. And we like that. T0 is actually a subsidiary of Overstock. What's interesting about them is that they were the first company in the world to issue a crypto security. And when they issued a bond not too long ago, I think it was in June last year. And they did this by making use of colored coins. So in other words, that bond actually exists on the Bitcoin exchange, but it used a tiny amount of Bitcoin in value, but appended this kind of metadata onto to record the transaction. And they have already approved or received approval to issue another $500 million in a bunch of other different types of securities. So we like it because it shows us that it can be done. You can have securities issued on the blockchain or on any other distributed ledger, and that regulators, given the right circumstances, will allow us to do those kinds of things. Why are they doing these kinds of things? Is obviously they believe that, core to it is that they believe that the transaction and the settlement suddenly becomes the same thing. And that changes quite dramatically the way that you issue securities. We like OpenBazaar because what they're trying to do is hone in on one of the use cases that are predicted to be some of the more significant ones that are going to come out of this whole process. So they're trying to create what's the equivalent of a peer-to-peer competitor to eBay. They've received $1 million in funding. And the idea here is that you'll be able to transact completely, but only on Bitcoin, but in a completely distributed way. And we think that if that kind of e-commerce transactions became a situation where suddenly everybody had their own store when you wanted to sell something or you wanted to consume something, it could make some really interesting things. It plays to this idea that you need to first disrupt the business model in such an early stage of a technology. ZapChain is interesting for us because it points to a completely different way of how to create high-value content and how to incentivize people to consume that kind of content. So it's a little bit like Reddit, and the difference is that every time you upvote, that there's a certain amount of Bitcoin that's embedded in that vote, and the OP or original poster would get that value. But on the other hand, you could have other things, like you can put bounties out there and you can ask questions, maybe something like a Quora type style. So like if you have a particular question over in a specific area and you say, I'm going to put a bounty up for like best 5 answers to this question, we'll each get 1,000 bits. Then some interesting things start to happen there. And I think that for me, it also gives us an indication of like, is this in any way part of the solution to the ad blocking problem that people are having on the content side? Because in that kind of world, were it to come true, you wouldn't need to have advertising because there would be other ways of paying for that kind of content. And it would naturally affect which content would be classified as or viewed as being high value versus not. So we think some super interesting things are happening in that space, and we want to see where they go. They're already very, very active within specific, very niche categories, but definitely worth watching. And then I want to talk a little bit about some of the startups that I feel give us more of an indication of, of like what perhaps we should not be investing at the moment. And I'll just use these examples. I don't mean that these are the specific ones we wouldn't have invested in or shouldn't invest in. And the first one is this idea of a company that makes Bitcoin mining equipment, so the hardware side of the business. And the reason Mining ASICs happens to be an example of, they took a sort of crowd-funded approach of saying, you put down a deposit and we'll deliver the hardware and everybody's happy. And they realized quite quickly that that technology requirement in order to do mining at the moment is so high that you can't fudge it. And so despite the fact that they had raised money, they weren't even able to ship a product that was capable of performing that function. And so right now, we would stay out of Bitcoin mining hardware. 21 Inc. So the promise of 21 Inc. was, and they raised like over $116 million, and the promise was that they were going to enable everybody to become a miner in a very massive parallel processing network. The reality is that they brought to market a chip which they believe you'll be able to embed into just about any mobile device and sort of enable some of these Internet of Technology use cases. But there's some question marks around whether or not that technology is even still at this stage capable of mining any Bitcoins. So the question is, did they try to solve a problem which is actually a software problem in a hardware fashion? And so I think that what it tells us is that, once again, sort of this idea of like, should you be playing in the hardware side? The problem is that the hardware side of this whole Bitcoin discussion is not disruptive to the existing players in the PC market. And why that is important is that Intel, when they eventually one day decide that they want to be an important player in this space, will just put money into a new division and make some slightly different decisions about technology. It doesn't change their business model. It doesn't change their route to market. It probably doesn't even change their customers. So only at the point where significant amounts of hardware is actually being consumed at an Intel level would these sort of things become relevant. So once again, hardware, really tough gig, tough to make that one work. And this Bonafide is interesting for us, not because it wasn't a particularly big startup, you've probably never heard of it, but what's important about it is that what they tried to do is to provide an API to exchanges and wallets and provide reputation information on users. And what's interesting for us about this kind of startup is that they're addressing the lampshades while we're talking about the plumbing. It's just too early. It's not relevant yet. Probably too difficult to sell the solution just on the basis of what is the problem that you're solving. And so once again, too far ahead of the market. Whether or not it may be useful in the future becomes irrelevant because the timing of it is not right. And then some Bitcoin exchanges as well that went under, like Harberly and Yakuna, and they went bust for very obvious reasons. They never got to scale, and because they never got to scale, they never actually got to make any money. They didn't have market liquidity. So what that tells us is that investing in Bitcoin exchanges right now is probably, you're looking to lose your shirt, unless that Bitcoin exchange is already quite far along in terms of their market development, or they're doing something that is radically different to the way that people are doing it today. And then finally, just as sort of a final note, is that this idea of interesting how quickly technology can make your business obsolete. Broker enabled people to make purchases, product purchases using Bitcoin. And you go, oh, cool, that doesn't sound very exciting. And that's kind of the point. The point was that as soon as you were able to use your credit card in order to purchase Bitcoin and post it into and use it in a wallet, it made their business obsolete. And so I think that the takeaway there is that one should always be careful about who it is that you may be competing with in the future, or how that technology environment or ecosystem might change, and suddenly the problem that you're addressing doesn't exist anymore. Thanks. Any questions?
Yeah, great. Thank you very much. Lots of food for thought. Jonathan.
Thanks so much. That was really interesting. So you mentioned that you wouldn't invest in Bitcoin exchanges, but then you mentioned a whole bunch of Bitcoin exchanges in the stuff that you were very interested in. You mentioned a mining company that you think is great, but then another mining company that is totally uninvestable. Is that team kind of dynamics, or are there like real market sentiments behind that?
No, I think that I'm just trying to use them as examples. So if I just use, for example, the mining discussion. So on the one hand, you have somebody who's already quite far advanced and has the impact to affect network hash rate, whereas you have another that is trying to do hardware, doesn't have a compelling solution yet, and so it's a completely different kind of business. And again, I wouldn't invest...
That's a capital problem. That's literally just a capital problem.
Well, no.
Is there any effect? Does BitFury have a network effect?
Well, I think the question is, and that's a good point, is that we think that it might. Not at a traditional sort of social level, but how will it affect the Bitcoin network is the question that we have.
But that's purely capital, and you could just solve that. Okay.
Well, no. The underlying assumption here is that the Bitcoin technology actually works, whereas in the other case, it never actually worked.
Thank you for a very good presentation.
Cool. Thanks.
You've pointed out investable criteria, and you've given us examples of the type of Bitcoin-based companies that you wouldn't invest in. So in real-world terms, what sort of Bitcoin startups would you invest in?
That is exactly the kind of question, and probably lends itself to the previous comment, is that we just don't know until you bring it to us and you say, I have this problem that exists in this specific industry or this specific use case. And in this specific example here, we believe that by applying Bitcoin or other distributed ledger technologies, we're able to create something that is super compelling using what is compelling about that technology, as opposed to us putting it out there and going, we are desperately looking for something in these sort of categories. And that's partly a reflection of the fact that in South Africa, we don't get the opportunity to pick and choose the way that VCs in the US can do sort of industry-specific specialization. So for us, it's more like, bring me a good idea that you can show me that there's already been some level of adoption and that you're addressing a really big problem, and we'll probably put the cash in.
Okay, we'll take Simon next.
So OpenBazaar is an interesting example because at its fundamental layer, it's going to be completely open source. There's no inherent business model in the actual application itself. The investors took a leap of faith saying, hopefully the team will invent some value-added service on top of this open platform. And as an investor, I guess it's a difficult thing that you have to reconcile. What do you think about that kind of sort of idea around decentralized applications and business models around that?
So perhaps what I need to clarify is that I'm not saying OpenBazaar would be a good investment for us to make. I'm saying that OpenBazaar is a good indication of whether or not that use case is even relevant and whether or not somebody can build something of value in that. Second step in that process is to go, okay, well, if we did put money into it, then can you make money out of it? And I think at this stage, as I mentioned right early on, like financial model is probably the least important criteria to us at the moment because we just don't know. Nobody knows how you're really going to make money in an environment that doesn't exist yet. So for us, it's more like, does it give us an indication of the fact that P2P use cases, whether they're open source or otherwise, can they be compelling and can they be more compelling than they would be if we had never actually applied Bitcoin to it at all? So that's it.
Great. Over there.
Hi, my question is in line with the critical, what did you call it? The critical factor framework. Yeah. The last 2 days we've just heard about, and we all know that you can't look at Bitcoin or blockchain in your traditional sense as how it fits into the physical environment. So you have to change the paradigm shift in the way you think. And similarly with regulation, how you regulate it can't be the traditional way, like how you didn't regulate the internet the same way you did a telephone, for example. But your critical factor framework is the same as you would any other product that's not Bitcoin or blockchain. And then the thing is, the reason I'm asking is your selection criteria, you spoke about things like market potential. With this technology, isn't that kind of difficult to predict at inception, as well as your filtering criteria about routes to market, etc.? I'm just wondering, is that the most appropriate framework to use? I'm just curious.
Yeah. No, so I completely 100% agree that if you say, how many people do I have today that will use, say, OpenBazaar? It's not going to be an interesting number. And if you looked at it like that, you would go, well, there's no point in investing. And I'm not suggesting that. What I'm saying to you, for example, is that just if we had to do something called the sort of an addressable market calculation for that, is we'd say, how many people are purchasing online using Bitcoin? And go, okay, well, how many of those people have ever used something like eBay or some other kind of similar kind of service? And if that number, based upon current activity and current monetization, is not interesting, it's unlikely that the new one is going to be. Now, of course, if we looked at a specific example, I guarantee you'll be able to show me one that breaks that rule. So it's more like an indication than it is like, oh, it's hard and fast and it's like you're in or you're out. It's not about that. It just it helps us to make decisions by abstracting or extracting that emotion which is associated with this is cool. And we don't want to make decisions on the basis of this is cool. This is cool is important, but it's not the most important thing.
Yeah, so, well, that was a great presentation, I would like to say, and running through all these companies is great education. But I'd like to point out that the fundamental reason that Kraken would not pursue BitLicense is not a philosophical one, but more of an economic one, that the costs associated with applying and complying with the BitLicense are well over and above any potential revenue generated from New York State. And I think you can kind of see that right now if you look at the most liquid US dollar order books. They are not companies that have even begun to comply or to attempt to comply with the BitLicense. And maybe it's a kind of a lesson to regulators in the room, you know, that too much too soon without kind of surveying the landscape adequately, you can really drive away innovation, business, and, you know, maybe the future of finance from your jurisdiction.
Cool. Thanks.
So I have a kind of general question, not blockchain specific. Here I am. And it's really just sort of trying to get your perspective. I've been told, so this is not personal experience, that one of the challenges facing South African startup businesses is not in their seed funding. Lots of seed funding available. If you've got a good idea, people will give you money. The challenge is your Series A, because South African investors want you to be making money much quicker than potentially a VC in the US, where you go from building to growth to revenue generating. South African investors want you to build and then start making money. So instead of getting Series A investment to grow and scale, they're expecting you to be ready to start making money. What's your view on that?
I think as in any industry, you've got good players and bad players. I think that I have seen examples of that, and I've been critical of exactly that sort of thing of like, don't go for the money too early because you limit some of your choices later on down the track. So there are VCs in South Africa that will tell you to go for break even as soon as possible. But part of that is I mean, there's a bunch of reasons around so who's providing the money and like what is their preference. So in South Africa, very often, some of those decisions are made at an investment committee level, where the money comes from institutional investors. And that sometimes affects how conservative or aggressive you can be with your plans and whether or not it will get funded. So we also need to live in the real world. On the other hand, I am seeing that there are people that are becoming more and more willing to maybe do some slightly more disruptive stuff. And I think that if you can position the business as not just don't position it as a South African opportunity alone. If you believe that the market, that you do actually want to push for growth. I mean, that comes with a whole bunch of new issues that you sort of open up. But I think that the principle is it is possible to do Series A without pushing immediately for profitability. But in a market like South Africa, we also need to be aware that there are some other constraints as well, which makes it difficult for VCs, even well-intentioned VCs, to actually give a Series A and just go knock the lights out.
Great. Llew, thank you very, very much.